Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, March 12th, 2012 is sponsored by Realtik. All right, we're going to get right into the mix today, folks. The markets are trading flat on the day. A very quiet day, folks. It's after 2 p.m. Eastern Time, and we have not even done 71 million on the SPY. We're on target to probably do right around 100 million. This could be amongst the lightest trading days of the year thus far. Now, why is it so light? Well, essentially, you had a very volatile week last week, so initially people are taking that kind of hangover effect note of the markets, meaning that after some wild action, people are very hesitant to commit money or buy or short the markets. They want to see where exactly this thing is going to go. In addition, there was no major news coming out of Europe over the weekend, nothing really of significance out of China or nothing out of the US. So again, no catalysts because no news around the globe, nothing out of Iran, nothing out of here, there, or anywhere. And then ultimately, bottom line is the Federal Reserve has their FOMC policy statement meeting coming up. And again, no one wants to commit for the 8th time here. As I've said, each little factor is a reason why people don't want to commit money. Again, the fact that the Fed is coming up, no one wants to commit capital to this market just yet. All right, and again, that's really the bottom line. People aren't ready to jump one way or the other, therefore it leaves for a very light volume session. The spiders are down 5 cents on the day. If I go to the Dow is actually up 39 points, rallying on the back of ExxonMobil, which we'll talk about in a little while. NASDAQ is down 3 points, and the S&P 500 is actually just up 16 cents on the day, so basically flat there. Again, you can see the action here. If I zoom in just a little bit on the charts themselves, you can see that the market opened flat, then saw some selling. We came beautifully down into this green trend line. And again, this green trend line, if I zoom out just a little bit, you can see it's the pivot high going back to Thursday, the pivot low on Friday, and again, the pivot low today. And that's giving us the basis of support. And anytime you have light volume in a market, support is always going to hold up better. Resistance breaks a little bit easier, support holds better. Remember, the markets, when there's light volume, generally will have a neutral to upside bias. All right, so again, just keep that in mind. Very, very important to remember. Now, again, a couple other odds and ends here, folks. Where are the next resistance points on this market? Well, if you continue to float higher throughout the rest of the remainder portion of the day, you're going to be looking at this resistance right up here, which is right around the 138 level. And if you get through that level, you have to zoom out to find the next level, which is at the 138.20 level in blue. Those are your two resistance levels. And again, if I zoom out enough, as I just did here, you could see the volatility in this market. I mean, last week was a great week of volatility. 2 down days early in the week, with Tuesday being the big one, Dow down 200 points. And then just like as if it never even happened, they rallied this thing back in 3 days to bring it right back to these recent highs. And again, that's the way a bull dies. A bull never just rolls over. When was the last time you saw a bullfight? Maybe none of you have ever seen a bullfight, but if you see a bullfight, they go on for quite some time. It does not just end immediately. The bull just does not fall over dead. Right? It's very gruesome, very ugly, but nonetheless, bottom line is the bull does not roll over and die. The bull actually gets even more angry when it first gets it kind of stabbed, if you will. Okay, and again, you can see almost the market roaring back. And again, I likened this market last week to a building that's beginning to sway back and forth slowly. It hasn't collapsed yet, but you're starting to see kind of the cracks in the glass, cracks in the ice, if you will. All right, now let's take a look at a couple other things as we have now noted the S&P 500 off of this SPY intraday chart. I said I'd mention ExxonMobil. Exxon's probably one of the biggest components here today, rallying on the Dow Jones Industrial Average. And again, you can see 2 down candles here, but that's after a 3-bar surge, and Exxon is up over $1 on the day. And again, this is carrying the Dow. If you remember when I first started the video, I said, hey, Dow is up 37 points, 40 points or so, and the rest of the indexes are flat or negative. And sure enough, one of the reasons why the Dow is positive here is because of Exxon. It's also because of IBM, which is up 35 cents, and there are other key Dow components that are nicely higher today as well. And again, so the Dow is leading. Now, the Dow it's not always a good thing when the Dow leads, and I want to be clear about that, folks. Always remember that. The Dow is kind of like old school safety stocks. So if you're seeing money flow into the old school safety, it may be an indicator that some smart money is starting to kind of go into that more conservative mode, of saying, hey, listen, the Fed is coming up. Are they going to talk about QE3? Chances are they probably will not. Therefore, the markets may see a little volatility midweek or so, and that could cause some selling. So, again, if we're going to pick up stocks here and put money to work, let's go into Dow safe stocks that pay dividends, like Exxon. Exxon's a very safe stock. All right, IBM, same thing. IBM again pays a strong dividend. Yes, it's a little pricey up here. If you go to the daily chart, you can see it's had a pretty big rally. But overall, compared to some riskier tech stocks that are kind of, those mid-cap levels, it's definitely not as risky as those on IBM. Now, another stock that's also carrying the markets up is Apple. Apple continues to kind of grind higher. New all-time highs today, folks. Again, the company worth over a $500 billion now. And again, my guess is you have a little bit more upside. We have a master level we've talked about to our members. I am looking for that master level. I am not going to give it out in this video, though. If you want it, you take the 7-day free trial to the Research Center, which is for swing traders, or the Intraday Stock Chat for day traders. And you will get all the levels where we're looking to short this market. And by the way, folks, another stock I'm keeping, well, it's really an ETF that I'm keeping an eye on, is the VXX, which is the VIX tracking ETF. And this will be a buying opportunity soon. But the question is when. We know, and we are willing to give it to you, assuming you're part of the free trial here at InTheMoneyStocks.com and you see what we're all about. We will give out these trades. And these trades will all be coming out this week, folks. I want to make that clear. This week is a very important week to start to accumulate a couple things when it's at a master level. And this is key. One of the other things I mentioned to the members, and I really have driven home to them, is that you just can't short arbitrarily random stocks. What you need to do is you need to look at the chart and find the master level. And I'll teach you how to find the master level, and I'll give you where my master levels are. And if you know those master levels, regardless of whether or not the market goes up a little bit more or down a little bit or whatever, you're going to get your level and you're going to be in the money. And a good example on those would be Caterpillar. Caterpillar, which is falling at $1.50 today. Beautiful fall off a bear flag. I ended up shorting this, and I gave it to my members at a master level all the way up here at the 116 and change level. Now, I'm right now basically $8 in the money on this trade, but the point is the market has really not, it's right near the highs. We're 50 cents, 40 cents, 30 cents off the 52-week highs at this point of this market. Yet I'm in the money $8 on my short on Caterpillar. Well, how does that happen? I mean, Caterpillar's pretty much a name brand, large cap stock. And the answer is it was because it hit a master level where you could take the trade. All right? And another good example of this would be MasterCard. MasterCard, the master level that I gave out to my members where we shorted it, $427.75. And sure enough, I'm in the money, basically $10 on this trade. And you can see, again, what a fall it had to the 20, then bounced back a little bit. And again, most likely that high level that we've seen on this, or that has been seen, is probably the high level to last, in my opinion. All right, some other stocks. We talked about some strong stocks today. Let's now take a look at some weak stocks. JP Morgan and the financials, very weak today. It's interesting that the market is as resilient as it is, but I guess the resiliency in the market is mostly because of Apple and ExxonMobil. Remember, Apple actually makes up a huge percentage of the S&P 500 and almost 20% of the Qs, the NASDAQ 100. So if Apple's up, it's very tough for the market to ever be down. Flat, okay, everything else is weak and Apple's up, markets are going to be flat. And then you look at other things like, if Apple's up huge, markets are definitely going to be rallying that day. And if you compare the chart on the daily chart of Apple to the daily chart of the SPY, they're almost identical. Apple's been a little bit stronger as the rest of the stock market has dragged a little bit on there, but not by much. Anyways, bottom line is JPM is weak today. Financials are weak, but if we punch up Apple, Apple's up $6 on the day. Beautiful move on Apple here, trading near the 551 level. My guess is, again, it's going to go up a little bit higher, folks. So just be aware of that. I know a lot of people out there are itching to short this thing. And I don't mind a short, but the question is, can you do it at the right price point? If you're going to do it or if you're going to buy puts, where do you do it? We have that level. We'll give that level out. All right? So let's just take a look at a couple other things. The small cap that I am loving today is this THQI. Low end of the chart has tons of cash, basically trading at 50% of cash value right now. Buyout target, it's a video game player. I wouldn't be surprised if they get bought out. They have some hot video games, and it's just trading at base bottom prices. So I wouldn't be surprised if this continues to rally up sharply over the next few days. Considering the market, where it's at, where every other stock has gone, this is extremely cheap, trading below cash value, folks. And there is some good value in this company, no doubt about it. Whether they turn around the company or not, who knows? I still think it's probably a buyout play, though. And again, a buyout could be anywhere in the $1.25, $1.50 range, my guess, if not even more. So to me, it seems like a no-brainer down here. I do hold some shares myself, and it looks good. All right. Let me see if there's any other small caps. I want to mention TUDO. TUDO is a good example here. excuse me. This stock is a Chinese stock that's merging with Yoku, YOKU. And Yoku is up $7 today. Look at these Chinese stocks today. And this is the other thing I want to just mention, folks. You have to be on point here. The Chinese stocks are getting very, very hot. Very hot. A good example was the hidden gem from December I gave out. SCEI, Sino Clean Energy. I gave this out at $1.10, folks. It hit $3 and change just a week ago. And again, unbelievable move on Sino Clean Energy. And the Chinese stocks TUDO merging with that Yoku. Look at this thing, up $23 to 38 and change. Was as high as 43. I mean, it just shows you the base bottom levels that these things are trading at, which gives me a good opportunity possibly to step up and really look to maximize profits here. All right, maximize. If you can find a good Chinese stock, you can make a literal fortune. And I'm going to be probably giving out one on the hot charts and alerts, which is part of the research center, or two maybe, over the next few days because they're getting so hot. So be ready, guys. They're coming down the pipe. Money's going to be made this week. Come to InTheMoneyStocks.com and join us here. Join the elite, learn the methodology, and profit for life. Take care, guys.